Canadian Gullible Taxpayer Tax Scams for the Rich.
Okay, I can't resist. You can get the last question.
Well, my question is about tax arbitrage. And I have to compliment this conference as being one that has shown me that it is willing to talk about fraud in banking more than any other conference I've ever attended in my life. And I know for a fact that one of our speakers who was on this morning, Lord Adair Turner, was in the Guardian paper in England for talking about banks as having a policy of tax arbitrage, which damages the economy in so much incredible ways that the general public has absolutely no idea. And I would like you, Larry Summers, to explain what tax arbitrage really is and what it means to the public, like me, who suffer in that we have to pay banks from our tax dollars to rescue these criminal buggers for what they do to people like me, which is not people like you. So would you please explain it?
Criminal bankers.
The American journalist, Mike Kinsley, put forth the doctrine that the real scandal isn't usually the illegal things people do, it's the things that are fully legal. And that is certainly true with respect to tax sheltering and overseas tax sheltering and tax sheltering by financial institutions. Tax arbitrage comes in forms that are mind-numbingly complex, but its essence is that you borrow money and you deduct the interest on your borrowing, and you put the money somewhere where you earn interest and you don't pay tax on the interest you earn. And if you do those two things at the same rate and you can subtract, you recognize you make a profit that's equal to the tax rate times the interest rate on each dollar of your money. And there's no question that there's a lot of that goes on. There's no question that but for successful rent seeking in individual countries, there would be substantially less of it. There's no question that to fully address it would require more international cooperation than we have now. And there's no question that it is a very serious problem, as I tried to convey when I spoke about the dark side of capital mobility. I have no doubt that there are tens, if not hundreds of billions of dollars that should be collected by the world's fiscs that are not because of the kind of tax arbitrage activities that you describe.
But what happens when you sink your savings into an investment only to find a bank is calling you saying you owe them money, lots of money? Well, that's what happened to our next guest. Tony Crawford is the author of The Perfect Sting. And he joins us in studio, as does Robert Beers, a financial planner and tax consultant who has seen more than his share of people who unwittingly became sitting ducks for the big banks. Tony, could you very quickly tell us what happened to you?
Yes, this started in 1989 when my accountant came with me with some advice to put some money into an investment for a tax-saving opportunity. And what I wasn't aware was that there was a bank loan involved with this as a secondary risk. 10 years later, the bank came to me and told me that I owed them about $100,000 based on the fact that I had signed up for an investment that was supposed to have some payback and ownership in property.
And you had no idea at all. This hit you like a ton of bricks.
Absolutely no idea. This was a total surprise to me. And when the bank called me about this, they showed me documents that I had signed, and indeed I had signed a contract to the investment provider, they're called promoters, But the investment promoter had taken my signature to a bank with a signature affidavit that I wanted to borrow money, and the money went into the investment product.
Robert, how many times have you heard stories like Tony's before?
Oh, far too many, unfortunately. But I'd say since the late 80s to recently in about 2003, quite a few, well over 200 to 300 a year.
What happens? Are these legitimate investors that come up and just have some sort of a scam, or I mean, who are these people?
Well, they're called the promoter. They have a particular investment, whether it could be a real estate piece of property, a film, or a software type of syndication deal. And in order for them to complete the transaction, they've got to have investors such as Tony Crawford. And in order to sell the security, because that's what they're selling, they're not selling real property, they're selling a security in the syndication deal, they've got to be paid. And quite often they will use a bank to assist them in the process of being paid.
How often does this happen when the average, person thinks, okay, it's legal, they're not doing anything wrong. So when it becomes unethical, how do you make the distinction there and know when you're in deep water?
Well, unfortunately, it's normally too late. It's always after the fact, and hindsight is obviously 20/20 when you realize that what you were involved in really isn't what was started out to be an investment. These syndication deals start out by looking for individuals that are fit a classification of a sophisticated investor. In other words, somebody that has a reasonable amount of equity, a considerable amount of income, and has the ability to carry debt. They set their sights on these individuals, normally network through one or two that they get on side at the beginning, and they just spread from there. This was quite a large syndication deal. There was at one time listed 308 limited partners throughout Canada and the United States.
And the banks aren't held accountable at all?
Well, the banks simply are providing financing. The bank's view is this is a deal that's based upon the individual's ability to pay back a debt. The misconception, or I guess the misgivings or the misrepresentation, depending on how you want to interpret it, really comes from the promoter's point of view, where they are saying that the bank is on side, when in fact the bank really isn't on side. The bank is really there to make a loan.
Promissory note was signed and not dated. We know that. It says right on it. So it has nothing to do with the bank. It's not signed. Yeah. No, you signed a note directly to the bank. You signed a note directly to the bank.
We don't know anything about it. You could sign a million of those. I wouldn't know.
Nobody knows how many units are involved until you approve a loan.
I don't know about that.
You don't know about that. But what is a bank document doing with signatures from third parties?
Okay, to confirm that it was to try to get some confirmation that it was your authentic, genuine signature on the note, which is, I believe...
And this is the process for offsite closing. Terms and conditions of a loan are not awareness of debt. You meet terms and conditions of loans before you get the debt. So it's one comes before the other. And to meet terms and conditions, the bank has to get the documentation. Then you meet the terms and conditions, right?
Okay, so the acknowledgement and agreement contains the loan terms.
Yeah, the form that you signed. You signed a whole bunch of documents. If you didn't know what you were signing, that's your problem. It's your problem you don't read what you signed.
The question is, if a government knew of a sleazy bank practice that tricks people into debt with tied loans based on third parties representing other people's signatures to link secret debts with retirement investment plans, would a government side with the banks to allow profiteering to continue, or would a government expose it and do something to protect people from a debt crisis?
Okay, Tony, thank you for your question. First of all, Tina.
Tony presented this situation to the NDP Riding Association at the beginning of December, and you may also have seen his highly visible van parked around town to publicise his indignation. As Tony described his experience of an identity theft to the NDP members at the town restaurant, their reaction swung from the initial denial, that doesn't happen in Canada, surely, to doubt and then horror at the idea that yes, it could, and it probably happens more often than we realise if it was allowed to go unchecked. Hundreds of Canadians have suddenly found themselves responsible for millions of dollars in debt. You have to acknowledge the situation that exists and then strengthen the powers of the Security Commission so they can prevent this practice.
Terrence Young.
Thank you very much. I know the gentleman who's calling. In fact, I took some time about 8 weeks ago to meet with him in his home to understand his issue and to look for potential solutions. And I've committed, if we form a government, I will meet with the new Minister of Finance and we will correct the situation and put it in legislation and stop it from happening.
Thank you. Laura Domsey.
First of all, I'd like to say that in all banks, and this is just from my personal experience because that's where I'm employed, that if you are not following, compliance and audit regulations, then you're not doing your job, and a bank isn't going to keep you around for a very long time. Second of all, if that is happening, then I believe that as soon as the government finds out about it, they would put a stop to it, most definitely. And also, I think that banks have to be, doing their due diligence to ensure that they are knowing their customer, they know the person who's sitting across from them, and that they're not doing anything that has to do with tied loans, which is also illegal. It's illegal to do any sort of tied selling. And I think that, yes, the government would definitely be against that and put a stop to it right away.
Bonnie Brown.
Thank you very much. I, too, am aware of Tony and his case. He has brought it to my attention. I have received all the papers that he has about his case, and I have taken them to the Finance Department, and I believe they ended up in the office of the Superintendent of Financial Institutions. The answer we got back over that was that nothing could be done.
That's not a bank promissory note.
I'm sorry, and this promissory note in the bank's documents that we're relying on
isn't witnessed either.
Correct. You signed a blank promissory note to the bank, and the fact is that the purpose of this was meant to try to get some verification that they were getting your signature on the note. They did get your signature on the note.
Tell us, what steps did you take when you found out you owed all this money? And it was a lot of money, was it?
It was a lot of money, and it wasn't just once. My wife was in a similar scheme for $40,000.
Wow.
And that was totally unknown to us until the bank told me about my debt.
So what did you do?
Well, I obviously had to respond to the claim, and as the information came to me, I realized that there were third parties involved in this that I could make a counterclaim against, and that involved the accountant, that involved the actual promoter of the product, and of course the bank. And in the course of discussion, they told me that I was a sitting duck and that I would have to pay regardless, that the bank is perfectly entitled to reclaim the money simply because of the way the documentations are put together. And I had already written books in the past, and I thought there has to be a story here. So when this occurred 3 years ago, I began to take a diary, and gradually the book came together, and we're calling it The Perfect Sting.
Now, this was all legal. What they did was legal, is that correct?
I understand that everything is legal, and I have tried every angle, which has given me an opportunity to have emotional highs and emotional lows of incredible proportion. Sometimes I think I'm onto something, but I understand that the Canadian law is really in conflict with the ethics the banks promote they have. They don't have to have business ethics because the law says that whatever they do is going to be okay, and in this case they did far more than they should.
So loan, evidenced by promising
Personal loan
service application.
So what I can tell you is what's here doesn't matter. We don't get into the kind of due diligence that you're referring to because we're lending to you based on your credit. You can go blow your brains out, that's fine. We lend to you on your credit worthiness. On the merits of the investment, we don't look at it. Is it a good investment or not? That's not our expertise. It's what was inputted into CCAPs that matters. The bank computer is actually the credit decisioning machine. So what's inputted into the computer is what's important, not what's on the piece of paper. probably would have cut an official check to pay for the investment from the loan proceeds. But there's no circle of funds going through some secret account.